everyone, welcome. You are watching Business Today. I'm Neetu Chandra Sharma. Pharma major Lupin has delivered a steady set of numbers this quarter with a 24% rise in revenue and margins crossing 35%. The company's US business continues to perform well, even as domestic growth remains stable. Cost discipline and a stronger product mix have also supported profitability. To take us through the highlights of the quarter and what the next phase of growth looks like for Lupin, I'm joined by Ramesh Swaminathan, Executive Director and Chief Financial Officer. Thank you for joining in, Ramesh. First of all, congratulations for a good quarter. The company has delivered one of its strongest quarters ever. So what's behind this performance? And is it a structural turnaround or more of a cyclical high led by the US market?
As you would have seen, we have actually steadily improved our performance over the last several quarters, so to speak. This is on the back of, in fact, several new products that we launched in America and several other markets also. So speaking about America, this particular quarter, we ramped up on tolvaptan, something that we had launched in the previous quarter. This particular product has, in fact, in an exclusivity period, so it's a first to file, so clearly it has a lot of opportunity out there. So we kind of milking that. Apart from that, we have, in fact, products like mirabegron, which continue to do very well for us. Clearly, America has delivered a very, very strong performance. Numbers are about the 300 odd mark, so to speak, in terms of quarterly sales itself. But it's not merely America. There has been secular growth across other markets as well. Speaking about India, we have delivered pretty strong numbers, 8.8% this particular quarter. And every division of us, be it cardiovascular, be it the trade generics, be it, in fact, respiratory, they've all done pretty well. So that's one part, because it's obviously a very important geography for us. But also need to highlight, geographies like Brazil in particular, because we launched dapagliflozin in there, and that's done extremely well this quarter. And of course, if you speak about Europe, products like Lufobec, the respiratory portfolio continue to do very well. So it's obviously a function of the kind of products that we brought to the market. And also, in fact, the kind of razor sharp focus on costs across the entire P&L structure, so to speak. So make sure that clearly brought us great results from the bottom line perspective.
So when you speak about the US business, what has changed for Lupin in this particular market? Because numbers are showing really great.
No, I think it's just a progression of, the last several quarters, so to speak. We have been, the last several quarters, we've been focusing on delivering on, the respiratory portfolio and pretty complex products, So essentially, we began with albuterol, then followed up with Spiriva. We also had, the last few quarters, in fact, products like mirabegron, and this particular quarter, ramping up of tolvaptan. So it's clearly because of our focus on, in fact, delivering big hitters, which bring in value. That's actually contributed tremendously to the ramp up of the sales in America.
So when we look at the India market, there's been a modest growth. So what is holding back the domestic business, and what's your strategy to revive momentum in this particular market?
I wouldn't call it actually modest growth, because I think it's about the industry figure, so to speak. The industry is about 7.2 odd, and we have been doing about 8.8. So clearly, it's much about the industry. It's on the back of, in fact, a five-pronged strategy, if I may. The first is, of course, more feet on the ground, accompanied by, in fact, productivity gains as well. Second is having, in fact, a robust portfolio of products, part of it which is in license, but a chunk which is actually brought in from our own stable. Case in point is, in fact, the triple drug combination that we brought in a LABA/LAMA ICDS combination. The fourth is looking at judicious, M&As from time to time. So all of this have contributed, and of course, accompanied by sophistication in terms of a technology pack. So it's clearly, a patient-centric approach that we have followed in India, which has actually helped in growing the business over the last several years. And clearly, that's going to be the focus for the years to come as well.
Okay, so EBITDA margins have also shown a good number. So it's 1,000 basis points year-over-year. So what specific operational levers have supported this improvement, Ramesh?
I did speak about the fact that there is a tremendous focus on cost across every line of the P&L, starting from, in fact, the sales line, which is actually the buoyancy has been set in by the fact that we have a number of good products that we launched over time. In terms of other cost items, so to speak, there is levers like alternate vendor development, routes to synthesis when it comes to conversion, looking at, in fact, lowering our utility costs. Then going down the path of the overheads because associated with factories, there was a considerable idle time. So we looked at, in fact, zero-based costing to bring down the overhead base out there, rationalization of labor across the workforce in factories at R&D, productivity gains when it comes to the sales force and the like, focusing on items like failure to supply because the supply chain in some ways was broken a few years ago, write-offs associated with inventories. All of this have been pared down over the last several quarters, and this focus has helped in kind of shoring up margins.
Okay, so let's talk about the product pipeline. Lupin has around 50 first-to-file opportunities and 20 exclusives in the US pipeline. So, which of these upcoming launches or therapy areas could significantly shape growth in the FY 26 and 27?
So clearly, 26, we will continue to have the benefit of, in fact, the products that you have already launched. Tolvaptan will continue for some more months, and Mirabegron obviously will also continue. Then, of course, some of those products that we launched in the past in the respiratory portfolio are pretty sticky from a price perspective, volume perspective, that because they are pretty the drug device combination. It's not, these actually provide for moats, and clearly, they are sustainable over time. So clearly, Albuterol, Spiriva, our Zopinex, all of this have continued to perform very well. But that's not merely America. It's also the kind of products that he brought to other parts of the globe, the respiratory portfolio, to speak about Lufobec in Europe. Then we have products like Damuscla, which is actually an IP-driven initiative from our perspective for muscular dystrophy. That's done very well. And a number of other products that he launched out there in Europe. I would also be very proud of, in fact, our performance across various emerging markets. I just spoke about Dapagliflozin in Brazil, but equally have done very well from a M&A perspective across. So we have had acquisitions in various parts of Europe, in America in recent times, of course, and companies like Southern Cross in Australia. So all of this have contributed to this development over the last 3-4 years.
I would also like to ask you about the API business. Is this a conscious strategic shift, or are you de-emphasizing APIs to focus more on formulations and complex generics? Because looking at the numbers, it looks like that. What is your view on the API business, if I want to ask?
No, so API is, of course, a very important part of our overall vertical integration strategy. So clearly, we have retained 2 factories for this vertical integration. We have factories at Ankleshwar and Tariff, and of course, part of it is actually in Mandideep also. Whilst 2 other factories, Dabasa and Vizag, you're kind of spun it off into a separate company to focus on yet another aspect of API, if I may, the API CDMO business itself. Clearly early days out there, and it's shaping up pretty well, focusing on newer therapy areas. So clearly, we think that has a very different kind of a future with a lot of focus on working with big pharma to deliver value.
Okay, look at the numbers. Lupin is now net cash positive with a stronger balance sheet. So how do you plan to deploy this strength going forward?
Clearly, the idea was to actually focus a lot on capital allocation, and it's a very well-defined policy. We have, of course, have some adjacencies, but we've also kind of defined the threshold limits when it comes to exposure to these adjacencies. They are not going to be the dominant theme. Pharmaceuticals would continue to be the dominant theme. We would be looking at acquisitions in various parts, particularly in India. But of course, it's buying for value, not for at all cost, really. So if the proposition is compelling enough, we would be interested in India. We would be looking at specialty buys in Europe and America as well. Case in point, very recent times, we just bought into a company, Vizu Pharma, in in Europe, with in fact a portfolio of products in the ophthalmology space in Italy, Italy, Spain, and other parts of Europe. So clearly, it's a very calibrated approach, and really resonating with, in fact, our strategy for the business. We have also identified that about $250-300 million would be the sweet spot for individual, acquisitions. Not so no big bang, putting all eggs in one basket, if you may.
You have also made a start in the diagnostics and digital health. So, how important are these verticals for Lupin's growth story going forward? And in the next 5 to 6 years, how do you see these verticals evolving?
So I just explained that, so clearly these are important from our perspective because it does help us to actually contribute to, in fact, a patient-centric approach, so to speak. Clearly, these are not going to be dominant from exposure perspective. The focus monies allocated would be limited to, in fact, what we originally envisaged. So thresholds have been clearly defined by the board itself. But at some point of time, we would be looking at, allowing them to kind of spread their wings by bringing in private equity monies into this so that they kind of, can spin on their own axis, so to speak. So clearly that's a focus, so growing it, but up to a point and then allowing them to kind of flourish on their own.
Okay, so before we wrap it up, I would like to ask you, what is the outlook of the company in the next quarters and coming years? And are you also looking for expansion in portfolio?
Clearly, we are pretty bullish about the future with the kind of products that you're building up. The focus on delivering value through respiratory portfolio, complex injectables, the biosimilars, and the like, apart from specialty. I'm not sure what you mean by saying diversifying our therapy focus. Clearly, specialty is of interest to us. But so we just got into ophthalmology through a buy in Europe, and clearly we would be looking at supplementing that through further acquisitions.
Thank you so much, Ramesh. It is always a pleasure having you with us. And thank you for your time and sharing those insights and giving us a sense at how Lupin is shaping up for the coming quarters. Thank you.
Thank you very much. Thank you for having us on.
If you like the video, do like, comment, share and subscribe.